Welcome everyone to our live Q&A session this morning. My name is Natalie and I'm here with Dmitry, who will be answering all of your solo 401k and self-directed IRA questions. We will start answering those questions shortly, but if there are any additional questions that come up during the session, please type them up in the chat area. We will answer them today. I also just want to add that our next Q&A session is going to be on September 11th, 11 a.m. Pacific Standard Time. So please feel free to join us. If you have questions, submit them at the time of registration. Even if you don't have questions, we would love for you to join just so you can listen in and learn from other people's questions. So before we start, I just want to quickly introduce Dmitry. Dmitriy Fomichenko, he is the president and the founder of SenseFinancial Services, LLC. And we are a boutique financial firm that specializes in self-directed retirement accounts with checkbook control. He began his career in 2000 in financial planning and real estate investing. And today he is a licensed California real estate investor, a real estate broker, and a private lender. And over the years, he's taught hundreds of investment and financial planning seminars, and he's also mentored thousands of investors. So welcome, and thank you for joining us today, Dmitry.
Thank you, Natalie. Great to be here with you and looking forward to the questions.
Okay, so we are going to go ahead and get started answering the questions that were submitted. The first question is from Gordon. Can I wire $50,000 funds from my 401k trust account to a personal checking account first, and then use the $50,000 funds from a personal checking account to buy real estate properties under the name of 401k trust?
So Gordon, if you transfer funds from your 401k bank account into the personal account, that's a distribution. You don't want to do that. If you wish to purchase investment property inside of a 401k, then 401k must pay for the property. So all the funds must come out from the 401k account. There is no reason to transfer those funds to your personal checking account. And again, in fact, if you will do that, that will be considered a distribution. So if your intention is to buy an investment in your 401k, you simply transfer the funds from your 401k account directly to the investment provider. If you buy in a property, it's going to go to escrow. If you make a loan, that's going to go again to the probably to escrow. If you're investing in some kind of a syndication, then that's the funds will be wired from your 401k checking account to the investment sponsor. But you do not want to transfer funds to your personal checking account because that will be considered a distribution, which is a taxable event, and premature distribution also incur penalties. So that's a wrong way of doing that. Don't do that.
Okay, next question we have is from Lucy. I would like to invest using my 401k in a new company startup. There will be investor dividends every quarter, and the 401k would be a 5% owner in the new company. Would the 401k trust invest directly in the company with its EIN, etc.? If so, would I get the dividends tax deferred? Can I create an LLC for liability purposes, have this owned by my 401k, and get both liability and tax-free dividends? And what are my other options?
Lucy, if you would like to invest your 401k funds into a new company startup, then you will have to sign up documents appropriately. The documents must list your 401k as being the investor. The funds for that investment must come out from the 401k, regardless what percentage do you own, whether it's 5% or 50%. One other caveat that you need to be aware of is that if you're investing into an LLC, for example, LLC represents ownership. So if you're a member in the LLC, your essentially your 401k will be considered a partner. And if you're investing in an active business, the share of your income will be subject to unrelated business income tax. So you want to make sure that you discuss this with your CPA. The proper way to invest is to ensure that the company that you're investing in is a C corporation. Then you're simply buying shares of that C corporation. Then in this case, the dividends that you will receive will be tax deferred. Not necessarily tax-free. It will be tax-free only if you're using Roth 401k to make the investment. But if you're using a pre-tax, then those funds or those dividends will be tax deferred, and you will be taxed on the distribution that you take eventually. As far as the liability protection, again, if you're simply investing in a business, then business should provide that liability protection. But if you're investing in the C corporation, you're simply a shareholder. You don't have ownership in the business, so there's no liability for you. But I'm not a liability expert, so you certainly want to consult with the appropriate expert on that. But generally, that's how you would invest in a business.
Okay, next question is from Derek. I would like to help a local nonprofit with a short-term low/no interest loan to enable them to buy a piece of commercial real estate. The loan would be repaid by the nonprofit, which I'm not affiliated, in approximately 12 months. How can I think about this loan in a way that might work with my solo 401k? Is it possible to use these funds for such a purpose? Can I make an interest-free loan? And what about the loan at submarket rates, for instance, 1% APR?
So, Derek, what you're trying to do is you're trying to use your 401k, which is a tax-deferred qualified retirement plan, to make a loan to a nonprofit at a very low interest rate or no interest at all. That's actually a violation of your fiduciary responsibility to the 401k. So remember that you are an administrator of the 401k plan, and you are also trustee of the 401k trust. And your role is to invest those funds with having your 401k on top, representing your 401k. When you're using your 401k funds to provide a loan, a very low interest or no interest loan to a nonprofit, then you're not looking after your 401k interest. You're actually trying to help somebody else. 401k is not the vehicle to do so. If you have personal savings, you're free to do whatever you want to do with that. You can give a no interest loan to a nonprofit, or even give those funds to a nonprofit, but you can't do that with the 401k. You are to invest your 401k funds, keeping your 401k interest at the very top. And it's not a charity, so you don't want to do that. You want to invest in the best possible way to generate the best possible return on your 401k funds, and obviously keeping the risk in mind as well. So giving a non-secured loan carries a high risk. And again, that will be a questionable as far as fiduciary responsibility you have to your 401k. So bad idea.
Okay, next question is from RC. I am considering lending money from my solo 401k to my nephew. He wants to buy property, but he is short of funds. This will be an unsecured loan. Is my nephew a disqualified person?
So RC, if you're considering lending your 401k funds to a nephew who wants to buy a property, and this will be unsecured loan, your nephew is not a disqualified person. So technically, this transaction will not be prohibited. It will be a transaction between a qualified plan and non-disqualified person. So that in and of itself is okay. You can do that. However, lending to a family member and doing an unsecured loan, that's not very good idea, because you're dealing with the family member and you're taking pretty significant risk to your 401k. So again, your fiduciary responsibility to your 401k is going to be in question here. You want to make sure that you're protected. So let me use this example, RC. If you and I, if we were good friends and you had investment experience and I trusted you with my money, I had, $100,000 in savings, and I said, RC, you have investment experience, invest these funds for me. Would you take my money and would you give an unsecured loan to your nephew? Probably not. You will not want to risk somebody else's money. Well, guess what? Your 401k funds, that's not your personal funds. Think of it as you're managing somebody else's money, and you do have a fiduciary responsibility for that. So doing a loan like this technically is not prohibited, but you're actually placing your 401k funds into jeopardy because the risk is substantial in this case. If your nephew wants to buy a property and short on funds, you can certainly do a secure loan. So I would recommend at the very least doing that. But just in generally speaking, dealing with family members is not the best practice. So think twice about this.
Okay, Glenn is asking, with loans, should you have something in there about indemnity clauses?
That's a question to ask probably your attorney. There isn't a specific a rule for the 401k plans or IRA retirement accounts. If you're lending to someone using your IRA or 401k, you just want to make sure that it's an arm's length transaction, meaning that there is no disqualified person is involved in a such transaction. And again, you want to make sure that you're personally not benefiting from that, and your retirement funds you're taking very reasonable risk. But as far as an indemnity clauses, that's something that you'd want to talk to your attorney.
Okay, next question is from Sam. What are UBTI taxes?
Well, Sam, the UBTI stands for Unrelated Business Taxable Income. And this is an income that is derived from the business activity that is not related to the nature of the business. And in this case, it will be a nonprofit or tax-exempt organization, because your 401k and your IRA is tax-exempt organization. So it doesn't pay taxes right now. It's tax-deferred vehicle. When you invest making passive investments, then the income and all the gains from the investments like that will be 100% sheltered from taxes. But if you're investing in some kind of a business enterprise, then that will not be a nature of the 401k, because the 401k nature is to invest passively. But if it is engages in some kind of a business or maybe a partnership, then, for example, if you buy in a franchise such as a car wash, or if you're out of your 401k, you're running a flipping business, then your tax deferred vehicle engaging in a business activity, and that's not the nature of the business. It will not be fair for your neighbor who's actually running the same flipping business personally and paying taxes on that income and on those gains and the profit, and you'd be tax deferred. So IRS came up with this definition, UBIT, which is unrelated business income tax, and it is tax that is assessed on the income derived from the from the business income that is not related to the nature of the business. So you want to make sure the bottom line is that you're investing passively using your retirement account. And if there is some kind of an active business, be sure to discuss this with your CPA about the tax consequences.
Okay, this question is from Mary. What are the costs in having a self-directed IRA with your company?
Well, Mary, there is several different options that are available for you, and we do explain that. So I don't know which option you're interested in. I don't know which option is will be the best fit for you. So there is a um, custodial IRA, which actually we do not handle, where you deal with the middleman. Our specialty is a checkbook control. And the checkbook control, there is, again, a couple different options to do that. There is a IRA LLC, and there is a IRA trust. And as far as the annual cost to maintain, regardless which option you're going to choose, it's going to be $225. A flat fee once it's set up. So it's very cost-effective vehicle.
Okay, this next question is from AJ. How can I convert my 401k to invest in real estate?
AJ, if you have a 401k, if it is with the current employer, you may have challenge moving that into a self-directed account, because typically the employer-sponsor plan, there's limitations. If you're still employed there, you may not be able to access those funds. If you have a 401k with the previous employer, or if you reach retirement age and you're still employed, then you should be able to transfer those funds without any restrictions. Once you make that decision, then the next is determine which vehicle will be best for you. And you want to probably schedule a consultation where we take a look at your situation and then look at all the options and help you figure out which option is the best for you. Once that decision is made, then you establish the self-directed plan, which typically, depending again on the option, might take between a week, maybe to 3 to 4 weeks. And then you roll over funds, which is tax deferred, no tax consequences, into a self-directed account. And from there, you will have a checkbook control to make the investment. So once you identify the investment, you enter into a contract or agreement, you sign it on behalf of your self-directed retirement account, and then you wire the funds to escrow to acquire that investment.
Okay, this question is from Sam. Can a spouse of a solo 401k holder roll over money into the account?
Sam, if you have a solo 401k plan, and if you have a spouse, your spouse will be eligible to participate in a solo 401k as well. But your spouse cannot roll over their retirement funds into your account, because all retirement accounts are individual. So your spouse, number one, must be eligible to participate, and eligibility is determined by your spouse being involved in the business and receiving compensation from the business. So if that is the case, it doesn't have to be full-time. Your spouse might be employed elsewhere full-time, but also helping you in your business and part-time and receiving compensation. Then that will make your spouse eligible. Your spouse can then open account for themselves and roll over funds into that separate account.
Next question is from Paul. Is there a minimum annual contribution to a solo 401k plan?
Paul, the contributions are discretionary, so there is no annual contribution that you require to make every year. However, if you have a solo 401k plan, you do want to make occasional contribution, because if you establish a qualified retirement plan and never contribute to it, then the validity of that plan will be in question, because from the IRS perspective, you establish the plan for the employee benefits. And what are those employee benefits? Is to make contributions to the 401k. So we do recommend that you make contributions at least occasionally, every 2-3 years into the 401k. Again, you don't have to maximize it, but you do want to make contributions to your retirement plan occasionally, every few years.
This question is from Jeff. Are there any good tax-efficient strategies for pulling money out of a solo 401k?
Well, Jeff, I'm not a tax strategist. I'm not a CPA or tax expert to really answer that question. That's something that you do want to get with your CPA. But generally speaking, again, you have to plan for it. And potentially, if you want to avoid the tax consequences, one of the strategies is to convert into Roth early on so that it can grow tax deferred, and then you can take tax-free distributions. But there's also a number of other strategies that you can employ and implement. But that goes beyond the 401k. Looking at your personal tax liability, looking at your potential deductions that you can use to offset the income and the distributions from the 401k. So that question, number one, I don't know your situation to answer that. Number two, that's not really my expertise. So you got to get in contact with a qualified tax professional and someone that will not just prepare your taxes, but will help you create a tax strategy so that you can think ahead, think forward, and reduce your tax liability in the future.
Okay, there are quite a few questions that were submitted in the chat, so we're going to go ahead and start answering those. We have a question from Sri. How can you buy real estate or stocks overseas where your LLC and trust IRA are all unrecognized overseas?
Good question. It depends on what you buy in. So obviously, I don't have the knowledge or expertise in buying real estate overseas, and it varies depending where you buy it. It's certainly possible. Let me give you one example. Buying real estate in Mexico, which is, I have a number of clients who've done it. And if you wanted to buy real estate in Mexico, you need to create a Mexican LLC or equivalent to an LLC. Then your retirement plan will own that LLC, which will own real estate. But you got to talk to an attorney there who understands Mexican law. We also have clients who invested in Canada, in India, in Japan, and Europe. So it's certainly possible, but you got to understand the local jurisdiction, and you need an attorney or local expert who will guide you. But it's certainly possible.
Okay, Glenn is asking, are there any mutual fund brokerages that let you have a self-directed IRA? I was with TD Ameritrade, but they are merging with Schwab.
Well, if you have a self-directed custodial IRA, your options will be limited there or pretty much non-existent. But if you're using a checkbook IRA, then you can open an account, a brokerage account at a brokerage of your choice in the name of the LLC. And most of the brokerage do allow that. So that should be pretty straightforward. So you just simply open a brokerage account in the name of the LLC.
Okay,
but we don't make recommendations. That's up to you which brokerage to choose.
This question is from Sam. How does foreign investment start a business / buy real estate work with solo 401k?
Well, if you're not a U.S. Resident, then you probably don't have a retirement account. So that's not going to be applicable to you. You can certainly work with other investors who do have self-directed retirement accounts. They can perhaps be funding your business. But if you're not a U.S. resident and if you don't have a retirement account, if you don't have income here in the U.S., then self-directed retirement account won't apply to you.
Okay, next question in the chat. Solo 401k invested in operating business, so UBTI is due, and it's very hard to get a CPA with good knowledge of UBTI. Do you have any recommendations for a CPA?
We do have a couple of recommendations for CPAs that understand this topic, and you can go to our website. You can click on the resources and then recommended vendors, and we do have a couple of resources listed there for you.
Okay, question from Sam. Can you talk about the different different options for investing available with 401k?
Sam, if you have funds in your self-directed IRA or 401k, then you have virtually investment options. We here at Sense Financial don't offer investment advice. Our expertise is self-directed retirement plans. I can mention some of the most common investments that our clients are making, but we don't offer investment advice or make recommendations. Some of the most common investments will be buying rentals, so single family rentals, perhaps duplex, triplex. You can also invest in commercial real estate, such as large multifamily apartments, where you have a syndicator who pulls the deal together. They do the professional management, and you just come in as a limited partner, as a passive investor. Private lending is also very popular. That's something that I'm doing personally with my retirement funds. You essentially use your IRA or 401k as a bank, and you lend funds to other investors who need funds, who need funding. I like this because it's passive, it's low risk, because your investment is secured by real property, and you get nice returns, double-digit returns. So, and again, there is virtually unlimited investment options. So with self-directed IRA, the only investments that are not allowed, just to remind you, is collectibles and life insurance contracts. And then on top of that, you are prohibited from engaging in any transaction with your qualified plan, or using your qualified plan with a disqualified person, which is yourself and immediate family members. And then other than that, the sky is the limit.
Okay, this question is from D. I've got a small amount left over after purchasing property with a self-directed checking Roth. Can I take that small amount, 30K, and put it in a trading account and buy stocks?
You certainly can, D. You, again, just need to open a brokerage account in the name of your 401k, and then transfer the funds. You can link the brokerage account with your 401k checking account, and you can transfer funds electronically back and forth as needed. So that's pretty simple. And on our client web portal, under banking options, we do have a list of brokerages that we know will set up the accounts, and there are links to the appropriate applications. So follow that, and you should be set up pretty quickly.
Okay, this question is from Arthur. I have some funds in solo 401k and in an IRA account. Am I required to transfer the IRA money to the solo 401k, or have both and merge IRA with solo 401k whenever it will be necessary?
Arthur, if you have funds in a solo 401k and also in an IRA, you're not required to transfer funds from an IRA to a 401k. You can have both. But if you wanted to simplify, and assuming this is a traditional IRA that you're talking about, not a Roth IRA, because Roth IRA cannot go into 401k. IRS doesn't allow Roth IRA funds to go into 401k. But if it's a traditional IRA or SEP IRA or simple IRA, you certainly can roll over those funds into solo 401k and have all your retirement funds, so to speak, under one umbrella. So that will make it easier for you to control. You certainly have the freedom of doing so. And you can do so fairly quickly. All you have to do is just go to the client web portal, go to the setup section and click on step number 2, and we provide detailed instructions with all the required forms for you to initiate that transfer.
Okay, this question is from Mary. If I have real estate syndication investments in a Roth self-directed IRA, how are they handled for the heirs if I die while they are still invested? Do I need to withdraw all the funds within 10 years? But what if the investments are still active?
Mary, if you have a self-directed IRA that is invested in syndication, and something happens to you, and you have the beneficiaries. So that's very important that you have beneficiaries designated properly for your account. If it is an IRA, that's easier. The custodian will handle that, but you still have to designate those beneficiaries. If you have a self-directed solo 401k, remember that you are the plan administrator. So you want to make sure that you have that beneficiary designation form completed, and it's you send us a copy so we have it in your client folder as a backup, and you have it also easily accessible for your successor trustee to get a hold of if something happens to you. But the beneficiary will then be able to establish an inherited IRA, and the inherited IRA can accept the rollover in kind of the assets that are inside of your self-directed IRA into their own inherited IRA. And yeah, there is you're going to have to follow the rules. If it's because normally most syndications, they typically have a 5 to 7 year span, so you should be able to liquidate that investments in under 10 years. But if it happens that you have to take a distribution and you have illiquid investment, then what you can do is you can take in-kind distribution, which allows you to take the actual investment out of the 401k, not the cash, but the actual investment. The investment will have to be valued to determine taxable amount, and then that's something that you're going to pay taxes on in the year of the distribution. But it is possible to take distribution of the investment in kind.
Okay, not sure if we went over this, but this question's from D. Can I roll over my 401k pre-tax into my self-directed checking Roth? Would I pay taxes in the year that I roll it over? Can I even roll it to the self-checking Roth?
D, you're not specifying what you mean by self-directed checking Roth. I'm assuming you probably referring to a self-directed 401k Roth account, designated Roth account. So if you have a solo 401k and you have both pre-tax funds and you also have Roth funds, or even if you don't have Roth funds currently, you do have the ability to perform a Roth conversion. You can take your pre-tax money in a solo 401k and you can convert that into a Roth. It will be a taxable event, so the amount that you're converting will you'll have to pay taxes on in the year in which you convert, but you certainly can do that.
Okay, Rebecca's asking, I have a startup with a net loss right now. Can I still start a solo 401k?
Well, Rebecca, the rules for the solo 401k is that you have to have legitimate business or self-employment activity with the intention of generating profit. So if you just started a business and you're not showing any profit yet, you're just running at a loss, as long as you have the expectation of making a profit, then yes, you can establish a solo 401k plan. But again, you have to have reasonable expectation of making profit. If you don't think this business is going to be profitable, then you should postpone setting up a solo 401k. But Again, as long as you have reasonable expectations making profit, this business can still adopt a solo 401k plan.
Okay, we have a follow-up question from Mary regarding the cost of having a self-directed IRA. I want to do a self-directed IRA and invest only passively in real estate syndications and debt funds. No need for checkbook control. Self-directed IRA would only be sending funds to the operators. Cost for this type of self-directed IRA. So still considered a checkbook control with a $225 annual flat fee. Any setup fees to establish the self-directed IRA or to move funds into investments. When or how is the yearly fee subject to increase, and what reporting to provide to us?
Mary, if you're not looking to gain a checkbook control, then obviously that's not going to be checkbook control IRA. That's the whole difference of setting up a checkbook control so that you can have direct access to your funds. If you wish to go with the custodian, that's something that we don't offer. Our specialty is retirement accounts with checkbook control. So you'll have to identify the custodian, and each custodian have different fee structure. So you number one, you will not have checkbook control with such account, and you will have to go through the custodian, because custodian, they hold your funds and they hold all the investments of an IRA. And every time that you do need to make an investment or make a transaction, you have to go through the custodian, submit a request, wait for them to approve that, and then they'll charge you a fee depending on their fee schedule. But again, that's not something that we do. Our specialty only checkbook control, and the annual fee of $225 that I mentioned, that's for the checkbook control IRA only, not a custodial IRA. So that's something that you have to investigate directly with the custodian.
Okay, this question is from Robert. Can I use a self-directed IRA to do contract and pay off a loan on a rental property that I already own?
Let me make sure I understand this, Robert. Can you use a self-directed IRA to do a contract and a payoff? So I'm not sure I fully understand the question, but your self-directed IRA can make investments only. I'm not sure what do you mean by a contract and pay off a loan on a rental property that you already own. So that second part is certainly no, because if you're making certain investment with your self-directed IRA, all the gains or profit from that particular investment, and let's assume, or let's use an example, you're using your self-directed IRA and you're lending money. So it's a contract. You have a contract with the borrower. So you're making a loan, and then as a result, you generate some profit. You can't use that profit personally because it doesn't belong to you. You will have to take a distribution from your self-directed IRA if you wanted to use those funds personally, whether it's paying off a property that you already own or something else. So that will be distribution. You cannot mix the two together. Your self-directed IRA is not the same as you. It's qualified retirement plan funds, and you can't access them just tax-free for anything you want. It's you'll have to take a distribution. Hope this helps.
Okay, Sri's asking, can you have multiple solo 401ks on self-directed IRAs?
Well, technically that is possible. I don't see a reason why you will have multiple solo 401ks, but because even if you have multiple businesses, you'd be subject to a single contribution limit. So, but I probably need to clarify your question or your situation, what you actually mean, or what's beyond the question. But yeah, it is possible. We do have clients who have a self-directed IRA, for example. Somebody who owns a business and they have a solo 401k for the business, but they also have Roth IRA funds, and so they set up a self-directed Roth IRA because Roth IRA cannot go into solo 401k. that's a possibility. You certainly can do that, but reach out, and generally speaking, it's best to combine the funds, so this way you can keep the cost lower. But in certain situation, again, if it's a Roth IRA and then you solo 401k, those cannot be combined. You may need two accounts, but let's talk and see what's best for you.
Okay, another question from Glenn. Can you have a holding company as an active business and make it an S Corp? And have the holding LLC manage my two Lenny passive LLCs and then start a solo 401k in the holding company?
Yeah, a little bit complicated question there, but I think it's possible if I'm understanding this correctly. If you have an S corp, and that S corp is a management for the other entities that you may own, and if it generates a fee, so then it's a S corporation. S corporation is as long as it generates income, then you will be eligible to establish a solo 401k and use that earned income to contribute to a solo 401k. But yeah, you want to make sure it makes sense, the numbers wise and the tax wise, because you potentially will be taking the passive rental income and converted that to an active income, which will enable you to participate in a solo 401k, but will make you, or at least portion of the income, subject to self-employment taxes. So something to discuss with your CPA, and maybe three of us can talk about this and see if that makes sense, but certainly possible. And we had clients who've done it, or similar things at least.
Okay, Francis is asking, can I fund a solo 401k with income from unrelated W-2 income? Or must the funding come from the business associated with the solo 401k?
Yeah, Francis, you can't use the W-2 income from your employment to contribute to a solo 401k. Solo 401k is established for your business, and only business income can be contributed to a solo 401k. I mean, think of it this way. If you're employed somewhere and you have a 401k with your employer, but if you also have a business on the side, if you're doing some consulting work or contract work, you can take your side business income and contribute that to your employer 401k. That has nothing to do with that company, so you won't be able to do so. It has to be from the business income that from the company that sponsors a 401k plan.
Okay, we do have a follow-up comment from Robert. For his question, for contract, he means note. I don't know if that clears up the question.
Yeah, and I can assume that or use that as an example. So I think I answered that. But Robert, feel free to reach out to me directly, and we can clarify your question and answer.
Okay, well, those are all of the questions. This brings our session to an end. So thank you everyone for joining and asking all these questions. Again, our next session is going to be on Monday, September 11th, same time, 11 a.m. Pacific Standard Time. So please join us, submit questions if you have any, or if you don't have questions, again, feel free to listen in and learn from other people's questions. But thank you, and I hope you all have a wonderful day.
Thanks for joining. I enjoyed answering your question. Some very interesting and intelligent questions. Thanks for that. And I'm looking forward to speaking with you to maybe expanding on those answers if needed. And join us next time. Have a good rest of the day.